Gold has taken a sharp dip in the last 2 days and it has reversed the gains from the last 3 weeks. And remember, last week in my weekly analysis, I did tell you that gold is immensely overbought and it is bound to reverse any point of time. Yes, 1950 was the resistance, and it has on the weekly chart, it has created higher highs at 1960 before reversing sharply. And I hope you all profited, as on my daily analysis on Thursdays I asked you to remain short at 1950, and on Friday I asked you to remain short below 1910, and those who did definitely would have profited. So now what we'll expect next week, how to profit next week trading gold, we will see with the help of charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon, which will keep you updated with the twice a day analysis which I share for gold, one with the Asia session, next with the US session. Do watch the daily analysis as well. Let's start. First, we'll look into charts followed with indicators. Towards the end, I will give you the trading strategy for next week. Let's have a look here. Now see, so far gold was trading with the first support at 1900. See, couple of times it tried to breach this but failed to do so, and higher highs were seen. Now successfully it has breached with a sharp red candle here, and in fact we can see this was the consolidation zone on the daily chart. See, 1870 1880 levels, it has breached this support also and went till towards 1860, which is another very good support. Now see, also remember, first red candle, second breakout candle, and a very big candle here. Now if it continues, because there is a probability that because first red candle and a breakout candle, probably it can continue trading bearish. And also point to note that it is closed near to the bottom there, indicates there are still bears out there and the bulls are not very much strong, which has not pulled it on the up. Because if at all they were bulls, see, previous candle also had a very small tail and this candle is also carrying very small tail. Now this zone here, now see, 1860, once it breaches on the downside, remember the next support level or next trading zone for gold is going to limit between 1820 and 1860. Now this till 1820 it has got very good support here. You can see this was the level at 1820. See, if you look at the daily charts movement of last few weeks, you can find out it was consolidating in this zone and then this breakout has happened and it has continued to rally on the upside. Now these levels are going to play a very important role for gold, that is between 1860 to 1820. And yes, if it breaks 1820, certainly we are going to see it at 1790 1780 levels. So probability exists that it can try to take it a bit lower before it tries to bounce back. But at the same time, look at the daily charts for the, see, it has formed bottom here, and at this point I asked you that it is going to rally, and then at 1740 I told you that it is going to fly past 1940 1950 levels. Precisely, I had told you several times that this is a very strong resistance zone and it is precisely reversing from the same levels. Now I have drawn this for you. See, if you look at the gold's movement, lows, highs, then trading on the first half of this channel, that is the median of this channel. Let me draw it. Now see, so far it was trading between this, and if you look at long term, see, this was the bottom here, and if you connect the dots here, which makes 1840 as the bottom of this channel, and which is in fact a very good support here. So see, in between 1860 to 1820 levels, there is going to be immense support for gold, and I do not uh, expect that, because see, if it breaks below 1820, certainly it will call for more bears, taking the price further lower till towards 1780 and then 1740 levels, which I don't expect. However, these are markets and I am yet expecting that possibly achieving 1840 1820 levels and consolidating here, it can bounce back. So this is one point. Now let's have a look at the weekly. On the weekly charts, you can see four candles very well aligned. Higher highs are done. There is a reversal sign and it has seen a sharp drop here, giving you higher highs and lower lows. Now higher highs and lower lows, 50 almost $100 of move here, which makes the pivot at around 1910 levels. And yes, only above which, only if you see gold trading above 1910, you can consider that it is trying to go for a reversal, else every rise is an opportunity to sell gold in next week also. That is the first point. Till 1910, do not consider this for a bullish reversal. You can keep this. Now next point, if you see the previous few candles, Yes, there is a reversal. One green candle, second green candle, and see the body size was consistently increasing, and the three candles are done. Now, possibly because this is the first red candle, also we have seen on the daily charts it giving a breakout, and hence, and also this candle closing at bottom indicates that still there is bearishness and it may continue with the downward movement, which makes that a possibility for it to achieve 1820, 1840 levels within this week, because that will also mark almost 45 to $50 of. And also, if you see, just eliminate the wick and the tail here, and if you just look at the body size here, 1928 to 1965, that is almost 63 $65 of candle size. Now next candle, because now I am eliminating the moves here and here and for the next week, and if I just consider purely the candle size, if it drops below 1840 levels, 1860 levels, you can at least expect half the candle size, which means 35 dollars of move, which also brings it to the support level here at 18 20 25. So yes, there is a probability that it can give you second red candle, which can in fact carry a wick or the upper shadow. That is, it can achieve a high as 1880 1890 levels, and then a pullback can be seen, which might take it till towards 1820 1825 levels. Now also on the daily charts, couple of points to note. See this consolidation zone on the daily charts. Now, first support at 1820, which it might achieve, and then next to next week also we will see how it behaves between this zone, that is 1780 to 1820, which is going to be another crucial support level, because see, everything which goes up has to come down. It is trying to come down here. How far it can come, that we need to see, and possibly if it continues to drop, there is this support, and it should not break below 1740 for sure, because if it does, then it will call for the extreme bearishness. I don't see it breaking these level any point of time soon. This is just a retracement, and there is a possibility of a reversal from here too. Now let's have a look at the monthly charts. Now, on the monthly charts too, after giving three strongly bullish candles, achieving higher highs, it is reversed. And now, if you look at the wick here, see 1920 levels and almost $40 of wick. Now, see the bottom of this candle from where the month has started is almost at 1820 levels, which certainly makes it a very, very good support. And you can see multiple candles, 1833-36 zone, and then 1820 levels. So on the downward journey, again these levels are going to be a very good support. And also, once you can see here, probably it can try to breach the lows of this candle. It can extend the drop a bit, and then may trade sideways for the rest of the month and close the month at around 1860 level. So this is what we can expect, probably trying to pull it a little down, and then an upward pull towards the end of the month can be expected, which will still continue to make it bullish, because higher highs are seen, higher highs, and if you see this higher lows, so also this is also a very good probability. Now we have seen the monthly charts. Let's have a look with the help of indicators. Now see indicators on the daily charts. Still now the 20, 50 and 100, simple, exponential and uh, volume weighted moving average, all were trading with divergence. This was a very good bullish sign. It was also getting the support from the 20 period moving average, and the Friday's candle has taken a sharp dip, and it has got a tilt towards the 50 period moving average, which is now situated at around 1860 levels. So yes, these levels are going to play an important role, because below 1860 certainly we can see further more bearishness. Now on the upside, 1910 1920, which is going to remain a good resistance. The 20 period moving average are going to provide a very, very good resistance for gold. At the same time, it is trading outside Bollinger Bands, and certainly we may see the width expanding, and also a further red candle which will expand the width further here on the downside. And if you look at the directional movement, it is crossing over for a bearish move after trading in green for long. The stochastic, which was overbought till last week, has come down to comfortable levels and has seen a good drop. The MACD, and see, I told you this also in last week's analysis, that the MACD is crossing over at a high. It is trading with divergence. It will get it further down. I told you very clearly that it has seen the highs here, possibility for it to continue with the downward move exist. Now see, it is continuing to do that, one sharp red candle here. So, and it is still divergent, it is still indicating bearishness. It can pull it down very fast and then probably converge from here. So this is one probability. On the daily charts, it is still bearish. The stochastic was overbought till last week, extremely overbought, and since then we have seen a sharp drop. A vertical line has been seen there. Now this is on the RSI. Now let's have a look at the weekly charts here. On the weekly charts, now 1800 levels are going to remain an extremely important support. The 50 and 100 weeks average are sitting at 1800 levels. Now see, the 20 period moving average is already curving upwards. Possibly we may see it crossing over and then it can continue to trade bullish, and hence 1800 level should not be breached. This is a very, very strong support here. And if you look at the directional movement, which was trading with extreme divergence, has started to converge. The stochastic, which was extremely overbought, has seen a good drop here on the weekly chart. This is single red candle, and it has took it further down, and there is a probability that it can bring it further down. The MACD, which was trading with divergence so far, has started to converge, and with just one red candle here. So probably we can see it converging and crossing over soon. The RSI on the weekly charts was overbought, and it has seen a vertical drop here too. And still there is little more scope for it. Though we need to see it, we need to watch how it behaves in next couple of weeks, because vertical candles cannot sustain. Yes, it can show you little drop, but it has to cool down the indicators fast. And if the pace of the indicators dropping faster than the moves in gold, certainly you can assume or you can expect that it is still trading bullish. Now on the monthly charts also, 1800 very, very good support. The 20 months average lies there, and then 1700 level on the monthly charts. So it is trading with divergence and bullishness. The directional movement here is bullish. The stochastic on the monthly charts is overbought and now looking downwards. The MACD is bearish so far. It is trying to converge, but it is not yet crossed over. It is not yet crossed over, and hence this needs to be watched out for. Once it crosses over, we can see further greener candles on the monthly charts also. RSI now again looking down on the monthly charts as well. So we have seen the charts, we have seen the indicators. Time for us to define the strategy and trading levels such that you can profit next week. Now, if you want to, before I give you the levels, if you want to learn the art of trading profitably, you should join my mentorship batch. The 19th batch starts on 6th of February. Do not miss this opportunity. After that, you will get one more month. You have to wait one more month to join the batch and equip the learning. First, you should learn and equip yourself with the right tools, techniques, and strategies so that you can trade profitably. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now, first, let's talk about where to buy. And remember, till 1910, it is going to be a retracement trade on the upside. See, you can buy at 1871, expect 1875, 1880. This zone now again on the upside is going to be a pretty good support zone, resistance zone rather. So it has to break past 1880, then we can see it trading little bit bullish, and then 1891 and 1900. Now, two key points here. 1900, 1910 is going to be the next resistance zone. It has to break past this zone in order to trade bullish. If and only if it trades above 1910, you can consider this for a reversal, and then probably 1930, 20 and 30 zone will come into picture. Beyond that, certainly we can see it flying high. I don't see this happening. I don't see it rising. Even if it tries to rise at max 1880 levels, or in worst case 1900, 1910 zone. Even if it tries to rise, I do not see it breaking 1900, 1910 zone any point of time next week. That is my expectation, but these are markets and you are taking a buy entry here. Keep closing at every trade, keep closing the trades at every target, and keep re-entering if you see it trading in the same direction. Remember, capital preserved is also a profit if you are not losing your capital because you are gaining the knowledge on how to trade profitably and hence preserve your capital with a trailing stop loss. And on the upside, now there is going to be immense resistance. Possibly there is little more downside which can bring gold on further down. You can sell here at 1860 levels. Now below 1860, see, while rising we had observed 1854 levels first support, then 1847 and then 1840. And if you see it trading below 1840, further bearishness, 1833 levels and then 1820 will be seen. Yes, there is a probability that it can continue till 1820, which is going to be a very, very good support. And only if it trades below 1820, you can expect 1808 and 1800 levels. Now, on the downside, on the near term, also we are seeing a limited move and limited possibility on the downside as well, because below 1800 only it can give you very good bearish moves, taking it for 1780 and then 1740 levels. And hence, I do not see it breaking below this zone in this week at least. I see even if it tries to drop, the drop is going to limit within a extent, and that should be between 1840 1820. Very, very good support there. And further to that, till 1800 we may see it dropping, but there is always a possibility of a bounce back. Take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon. Thank you very much. Have a great profitable trading week ahead. Thank you.